What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see a cool down after Friday's rally and we're very close to knowing if we're going to get rejected from resistance or start to make some bullish developments. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 0.41% and we did close back over the 5 EMA for the second day in a row. The 5 EMA is just above 399 and we closed just above 400. So the last time we had two consecutive closes above the 5 EMA is going all the way back to April 20th. And back in April when we did get that price action, we did retest the 20 simple moving average as resistance. So the bulls are starting to hang in there and they are holding this support zone right around 398 to 400. And that is going to be a very critical support zone because as I told you in last week's episodes, if we start breaking below the 390s in SPY, we are likely going to see capitulation. Capitulation will at least take us down to 370, and I don't necessarily expect to see capitulation, but you still can't rule it out completely. So below about 393 to about 390, you need to be extremely cautious and risk off. But right now we are still trading up here above 398 to 400. The next breakout above here is going to be above 403 to 406. And then we could actually come all the way back up to the 20 simple moving average, which did close today right around 416. And we could still test resistance at 420. So remember, we've been selling off now for 6 weeks in a row. And even though that doesn't guarantee we have to rally, we are getting a little too oversold on the weekly chart and a counter trend rally is a real possibility this week. So we do want to be on the lookout for that counter trend rally, especially while we're trading above $400. So watch that breakout right above about 403 to 406. That could take us back up to our 20 simple moving average. Remember, in the big picture though, this is still a downtrend and we don't want to get bullish just because we're bouncing. It is more than likely just some relief for the bear trend. And we're not getting bullish until we start seeing higher highs and higher lows, and we still have lower highs and lower lows. You can notice the volume is dying off, so that could be some evidence of seller exhaustion. But keep in mind, we could see sellers stepping in at any point, especially if we do get up there to that lower high, we could start to see high volume selling yet again. So in the short term, as long as SPY is holding above about 398, you could be risk on for a short term counter trend rally, knowing that if we start losing that support level and start breaking down below 393, you need to get risk off and get ready for possible capitulation. Remember, it's a downtrend until it's not, so still remain very cautious of more downside while we have the benefit of the trend pushing price lower. And if you're going against the trend, just make sure you know your risk levels and you're using proper risk management. On the NASDAQ 100 QQQs, we were down 1.16% today. And as I said with SPY, you can see the volume is dying off, so we are definitely seeing some seller exhaustion. On days like this, they are bullish red days because if it was a bearish red day, we would have lost support at 297. So the bulls are going against a very strong downtrend and so far they are holding this support zone. Now you can see the QQQs did not close back over the 5 EMA for the second day in a row, so we definitely see some relative weakness there. And the strong resistance to break out above is right around 303 to 305. Above that, we could come all the way back up to retest resistance right around 315. And we also have that resistance zone right around 318. So there is a lot of resistance to the upside that could still be a lower high and we could still go lower in this downtrend. So remember, treat everything as a lower high until we see higher highs and higher lows. And that is going to take a lot of price action before we can see that development. Now the critical support down here will be at 297 because if we lose that support, you're looking for a retest of the low right around 285. And below that, we could still go fill the gap at 276.8 or hit a price target below there right around 270. So as long as we have the downtrend, we do have downside price targets that we can still reach. Otherwise, we need to see some type of bullish breakout in the price action and start reversing the bear trend. And then we can start looking for more upside price targets. So remember, I keep saying it's a downtrend until it's not. So if you're buying at support, know your risk, use proper risk management, and know your take profit at these resistance levels. There is no reason to get greedy on your long trades in a downtrend, so lock those profits and don't get greedy expecting more upside. In the Dow Jones, we were up 0.17%, and the Dow Jones still has this downside price target at 310, and below that we have a price target at 308, and we are currently sitting right at that resistance right around 322.6. And we did get rejected around that resistance zone at 326. So the next resistance above 322.6 will be up here right around 326.4. And above that, we could be coming all the way back up to 333. But all of those levels could still be a lower high before we come down and hit our price target. We have these downside price targets as long as we have the bearish trend. So we will be expecting more downside until we get some type of bullish breakout or lose the bear trend. So we'll be getting a lot more bullish if we can get above 333 and 340 and not any sooner than that because we still do have a strong downtrend that could push price lower. Also remember in the Dow Jones from my weekly analysis that we did break out of the trading range, so we should be expecting more downside until we can get back into that trading range and the bulls start proving they can hold one of these levels as support. On the Russell 2000 IWM ETF, we were down about 0.5% today, and we continue to get rejected around that resistance zone at 178, and we still do have the strong bear market. The downside price target is down here at 165.7, and we also have a gap to fill right around 174. So it's very likely that we are going to make at least one more leg lower, and if we lose that support at 165, we do have the price target at 156. The bullish breakouts will be getting back over our 20 simple moving average at 186 and getting back over this resistance zone in the 190s. It's a very strong bear market, so do not be getting bullish until we get a bullish breakout, or at least be locking your profits on long trades at resistance. On the ARKK ETF, we were down nearly 6% today as we break back down below the 5 EMA, and we're likely coming down to close this gap right around $40, which is also going to be a support zone. Remember that we did get that short squeeze in the ARK ETFs on Friday, so we are starting to see some of those shorts coming right back into the market around resistance, which is right around this 13 EMA, because this is such a strong bear market. The only way the ARK ETFs are going to scare away the bears are by breaking the bear trend, which is going to require a close all the way back above 52. So that is by far going to be the most critical resistance. The next bearish breakdown will be a breakdown below 40 and then breaking down to a new low below about 35 to hit our price target down here at 33.7. There is no reason not to expect us to hit the price target while we have such a strong bear trend. So we're not getting bullish on this ETF while it's in such a strong downtrend until we see bullish price action breaking back above the 50s, and then we could be getting more bullish for the gap close at 66. On the VIX, we were down nearly 5% today, and we continue to see the VIX getting crushed with 5 consecutive red days in the VIX, even though we are seeing some selling in the indices. So this could be another bullish indication that fear is leaving the market as we reach these lower prices, as buyers are slowly starting to step in and less people are hedging their positions. Remember though that the VIX is still elevated while it's above 24, and while we are losing the bull trend, we could bounce off of any of these support levels at any point and still have higher highs and higher lows in the VIX. To get a lower low, we need to break down in the VIX below 25 and get down here below 24. Now we can't completely rule out the fact that the VIX is getting crushed, but we can't just get bullish on that alone. We still need to follow price action in the indices. So watch the VIX, because if it does spike, it's likely going to do so off of the 50 EMA at 27, and we could spike right back up into the 30s very quickly. So you still need to be very cautious while the VIX is elevated above 24. And don't completely rule out the fact that the VIX is telling us that we could be nearing a market bottom, even though I don't believe we actually have seen the market bottom just yet. On Bitcoin, we're currently down about 4.3% with Bitcoin trading around $30,000, and we're still sitting above that very strong support zone right around 28,000. Remember, I do believe eventually we are going to find out who was buying Bitcoin at 25,000, and I do believe there were some big buyers in that zone. So for that reason, I believe that Bitcoin will hold above this support zone at 28,000, or at least hold above support right around 25,000. I could be completely wrong, so you still need to be prepared to buy Bitcoin down here at 20,000 if we do lose this support zone. But I can't help but believe this is going to be a very strong support, and we'll know it very soon as we see this level building up a base of foundation of support as more buyers step in at this level, and then we should eventually see a bullish rally from this level that confirms that we are getting a bounce off of support. The bounce off support should take us back above 32,000 and all the way back up to retest resistance at 37,000, and our bullish breakout will be getting back over 37,000 and then closing above our resistance trend line, which will be above 40,000. So I do believe as a bullish contrarian, you could be accumulating Bitcoin at this level. Just be prepared to buy more in the event that it comes all the way down to 20,000. On NVDA stock, we were down 2.5% today, and we see NVIDIA did get rejected from that resistance at 179 yet again. So there's still the possibility we are going to come down to this price target at 150 before earnings. Earnings is coming up now in just a couple of weeks, so there's still plenty of time to get there before any type of bullish catalyst. And at this point, we cannot get bullish until we get all the way back above 210. So on the way to resistance at 210, we still got to watch resistance at 179, our 20 simple moving average at 189, and this resistance zone right around 199. Above 210, we could be getting a lot more bullish, but we really need to be cautious of more downside while we have an outstanding downside price target and we're sitting in a bear trend. On Tesla stock, we were down nearly 6% today as we continue to come back down lower, more than likely to retest the low at 700. Remember, if we lose the low at 700, you're looking for the price target at 620 because we do have the confirmed bear trend and we do have bearish price action. If we get a double bottom off of 700, you'll be looking for the bullish breakout back above about 788, but we will have resistance at 762 $828 and $856, and we're not getting bullish until we can get back above $900 and hold that level as support. On Apple stock, we were down just over 1% today, and intraday we did bounce off of our support trend line right around 144, and we did get rejected from resistance just above 147.7. So we're still in the downtrend, and we still have bearish price action below all the moving averages, and we still do have a gap to fill down here right around 137. So it is possible that Apple is trying to get down there to fill that gap, but we will have very strong support right around 144 and 142, and we also do have support at 139. Bullish breakouts at this point will be all the way back above 156 and getting the bullish breakout above the resistance trend line right around 160, and we will have resistance right around 150 on the way there. So you can clearly see that Apple is looking bearish with the bear trend and the bearish price action, and as you know, Apple is a market moving stock, so we need to see some bullish price action in Apple to really get the indices moving higher. The financial sector was down 0.84%, and we're still getting the bearish price action in the very strong bear trend, so you still need to be very cautious in the financials. The industrials were down 0.14% today, and we still have the bearish price action with the bear trend, so the industrials are still looking weak at this point. The healthcare sector bounced today, going up 0.74% and getting back over the 5 EMA for the second day in a row, finding resistance right around the 13 EMA, and we still do have a bear trend. If we can get some relative strength from here, we should see the healthcare sector getting back over the 20 simple moving average and then getting back over the 50 EMA. On the energy sector, we were up 2.64%, and the energy sector did test a brand new 52-week high, so we are still seeing a lot of bullish price action, and we still do have the bull trend. So jumping back over to the S&P 500, this is definitely still possible that the bulls are trying to build up and consolidate below resistance and still break out to try to test the 20 simple moving average. But you need to be extremely cautious if we start breaking down below 400 to 398 and definitely below 393 to 390. There's still a possibility of capitulation, even though I do think it is a very low percentage, because when everybody is expecting capitulation and everybody is prepared for a crash, it is very likely not going to happen. That doesn't mean you rule it out completely, so you still need to watch those critical levels, but don't be getting overly bearish if we are sitting at very strong support and we're getting a little too oversold, now selling off for 6 consecutive weeks. Remember, there's nothing guaranteed in this market, so you need to know these critical levels, have a trade plan, and follow the price action accordingly. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can find out all of the information by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.